from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Saudi Aramco overtakes Apple as the world's most valuable company. How the tech and crypto sell-off, coupled with a surge in oil prices, is upending the order of the biggest forces in the global economy. Plus, two top executives are out at Twitter as the company looks to cut costs and freeze hires ahead of Elon Musk's takeover. This as Musk is looking for new funding as he cuts his Tesla margin loan. And we will be hearing from some top CEOs today. Brian Chesky joins us to talk about Airbnb's, quote, biggest change in a decade and how he thinks travelers will be hit by inflation. And we'll hear from ARM CEO as the chip company gets ready for an IPO. All of that in a moment, but first let's get a look at the market. Stocks, including tech, rebounding in the last hour of trading Thursday to close flat after a very dramatic day. Bloomberg's Ed Ludlow here with the latest moves. Ed?
Yeah, and we love that drama. Volatility, really the buzzword, gripping markets, right? We're down 0.2% on the NASDAQ 100, basically flat, in a day where the index fell as much as 2.5% at one point. We know the story. The market is concerned about the Federal Reserve's ability to bring inflation under control without carrying the economy into recession. And on that note, some breaking news after the market closed from Federal Reserve Chair Jay Powell, reiterating a previously stated stance that a 50 basis point hike at each of the coming two meetings is the appropriate course of policy at this point. Of course, we'll see how the market reacts to that on Friday. In context of that rebound, some interesting calls of the market. The Philadelphia Semiconductor Index up 0.5 percentage point all told, but broadly we saw risk-off sentiment, right? US 10-year yield down by 7 basis points as we saw people move into haven assets, including treasuries and Bitcoin. At one point down below $26,000 per token, came back a little $28,000 per token. There's a single name that you and I have been paying attention to all day long, Apple. Come with me into my Bloomberg terminal and look at this chart because Apple is caught up in this selling. You see on the right-hand side of your screen, Apple has dropped more than 20% from its January peak. The drawdown is 21%. What that means right now, the snapshot in time, it's no longer the world's most valuable publicly traded company. It lost that crown to Saudi Aramco. Of course, energy and technology moving in very different directions. The other thing that's going on, of course, is earnings season. You come back to me in the studio and look at this board. Rivian surging 18%, Relief Rally reinstating their guidance or reaffirming their guidance to build 25,000 EVs this year. And the other big piece of news, who else, Em? Elon Musk. According to sources, he's trying to line up even more equity financing so that he can do away with the entirety of the margin loan portion of the deal to buy Twitter. Could be some relief on paper for Tesla, but you see that stock still down 0.8%.
Another day, another twist in the Elon Musk story. Thank you. I want to continue this conversation now, talk about Apple in particular, falling again behind Saudi Aramco as the world's most valuable company. Pierre Ferragut joining us now, who heads up the global tech infrastructure team at New Street Research. So, Pierre, is this a changing of the guard here, or is this a momentary blip?
Well, it's actually not much is happening if you take a step back and look at Apple in the perspective of the world. You know, I look at on a daily basis. They, as Ed mentioned, they're down like about 20% from the high, 17% from their average value of the last 18 months. Look at Tesla, down 59%, Amazon down 30%, Google down 30%. So Apple on a relative basis is actually doing quite all right. There are a lot of reasons for that. You know, they've done very well. They've grown through the last 5 years, earnings more than 20% per annum, and they've done very well in the recent context through the pandemic, through like inflationary pressure. They've had actually very strong demand, and then when investors look at Apple today in this massive sell-off, that's actually more of a quality name, like a safe haven for them, because they tend to consider that Apple still has like a pretty nice outlook that revenue growth could continue. You have new product opportunities in AR, in autos. So like the longer term outlook for Apple still looks fairly attractive to investors. And that's the reason why I think the stock didn't do that bad.
So you're still confident in Apple's fundamentals. What about the broader tech sector? I mean, Saudi Aramco has leaped above all of them. And if you look at the top 6 companies by market cap, Apple, Microsoft, Alphabet, Amazon, all behind an oil company.
Yeah. So yeah, it's a good question, and that's what I've been working on in the last few days. You know, what are there opportunities like names to buy in this like broad tech sell-off? And the way I like to think about it is, what really triggered the sell-off initially is inflation and the concern of interest rates going up. Because of course, when you look at a very high growth company, if interests go up, it has a very negative effect on their valuation. Now, here's the way I'm thinking about it, Emily. A lot of these companies are actually fairly inflation-proof. So if you look at an Apple, a Microsoft, an Amazon, their ability to pass on cost is actually not too bad. So in an inflationary environment, they should actually grow faster because they'll be able to increase their prices with inflation. And so what I like doing...
Do you think investors are overreacting then?
Yes, I think that the investors' reaction is creating opportunities. And you need to look at these companies who have good pricing power, who have very strong market position, and who've been battered down in recent weeks and actually even recent months in the last 6 months. And you can find very, I think, very interesting opportunities. Like the 3 or 4 that pop to my eyes today are Tesla, of course. The stock is trading on 45 times earnings. It's down from 140 times 6 months ago. And it's still up to grow like earnings 40 to 50% a year. Another one is TSMC, the chip manufacturer, down 35%. It's trading on 15 times earnings. And it has a better growth potential, in my view, than Apple. And then the other one interesting worth mentioning is actually NVIDIA, down almost 70% from the peak. And here again, a company that has a lot of pricing power, very strong leadership in their market. Everybody needs their chip, and they should actually do very well in the next few years. So I see opportunities in that sell-off.
Even in the midst, Pierre, even in the midst of a supply chain shortage and a lockdown in China, I mean, NVIDIA, I mean, obviously Apple, NVIDIA is also exposed to that.
Yeah. So yeah, it's a good point. Like the next few months, or even the next couple of quarters, could be slightly challenging for these players. But I don't think you have any incremental negative news flow coming through on that front. So we are really in the deep of the supply constraint, and supply is now coming back. It's going to take time to get supply back, but it is already on the way up. And I think the situation in China, as much as it is like a dramatic disruption for a lot of these businesses, it's actually well understood. I mean, like Apple talked about it on their earnings call not so long ago, and investors are kind of putting their heads around that situation. So I tend to overlook that and think about, what are like the great compounding stories, like names that have this very high quality growth outlook and that have been that have suffered so much in this pullback. And that's where I see the opportunities. But of course, you have to look through the next couple of quarters, maybe.
Well, thanks for helping us try to make sense of it all. Pierre Ferragu, always good to have you, New Street Research. Thank you. Meantime, Twitter is making some changes as it awaits Elon Musk's $44 billion takeover, including cutting some big costs. Bloomberg's Kurt Wagner covers Twitter for us and joins us now. So, Kurt, 2 big executives leaving. Is this all because of Elon Musk, or is this because of Twitter's own business problems?
That's sort of the question that I'm trying to get to the answer to as well. We have a new CEO, of course, Parag Agrawal, who took over last November. And it's always natural for a new CEO to sort of want to leave their imprint on the new company, make some big changes, get their own kind of executive team in there. Of course, we're in this unique situation right now with Twitter where everyone's kind of in a limbo, right? They're waiting for Elon Musk to take over. So it was sort of interesting timing for him to make two big moves right now, although I'm told that this has sort of been in the works for a couple of weeks. So it's unclear exactly whether this was, a plan of Elon Musk's or something that Parag wanted to do sort of with Elon's blessing. I kind of get the sense it's maybe the latter.
So let's talk about who is leaving and the reaction. There were some not happy tweets, as one might expect when people get fired from Twitter.
Well, these are two long-time product executives, Kayvon Beykpour, who's been running product at Twitter for years now, and Bruce Falk, who's been running revenue product at the company. So two people who have been there for a long time and who a lot of people did really like. And when you are in a situation like this, right, where employees are already wondering, like, what comes next? What is my job going to be secure when Elon takes over? Is the team I'm working on going to be around when Elon takes over? And then you see two people who a lot of people like and who have been there such a long time kind of get booted unexpectedly. I think that creates a lot of, concern from employees. And so that's sort of what I've been hearing today. A lot of people scratching their head wondering, what does this mean exactly? And then what happens next for the rest of us?
Meantime, Musk is still trying to get financing, scrapping part of his Tesla margin loan. Are these two things related?
I think they're related in the sense that everything that Elon does kind of either makes the deal seem more or less likely. And I think the fact that he's perhaps, going to get rid of this margin loan because he's able to secure a little bit more equity financing, I think that just makes the deal more likely to go through, right? And so if you are sitting there as the CEO of Twitter, you kind of have to prepare for two scenarios. The one in which maybe the deal doesn't happen and suddenly you're still in charge. What have you been doing over these last 6 months to make that happen? And then the other where Elon comes in and then you're wondering, if you're Parag, am I still going to have a job under this new guy? So I think he's probably trying to navigate that. And I think Elon getting closer and closer to getting the deal funded probably dictates, the timing of some of these things.
Interesting. All right. Well, more twists and turns to come, I am sure. Bloomberg's Kurt Wagner. Thanks. Coming up, fresh off Airbnb's big changes to search, my conversation with CEO Brian Chesky. We'll also talk about inflation, all of this market turmoil, and layoffs across Silicon Valley. That is next. This is Bloomberg.
I'm not going to give you timing, Emily, you know that. Do I want the company to become a public company at some point? Of course. But I really want to make sure that the company that we do take public is a company that's reflective of this new, bolder vision.
Instacart CEO Fidji Simo there last month when I asked her on Studio 1.0 when the company might go public. Well, appears now is the time. Bloomberg has learned the company has filed confidentially paperwork to start the process with the SEC. The 10-year-old grocery delivery upstart was once one of the most highly valued of the gig economy companies and grew exponentially through the pandemic, but now will navigate a very volatile market. Instacart slashed its private market valuation by almost 40% in March as orders have slipped in a post-pandemic world. Well, it was billed as Airbnb's biggest change in a decade. The company rolling out a number of new features, including categories like castles and amazing pools and homes that make you go OMG, as well as split stays and air cover, which addresses one of the company's biggest issues, consumer protections. I spoke to Airbnb CEO and co-founder Brian Chesky about all the changes, along with concerns about rising prices, inflation, and how that will affect their customers. Take a listen.
Well, first of all, the reason that the price per night went up was mostly because people are booking more expensive Airbnbs. So before the pandemic, a lot of people were traveling by themselves or one person. They were booking 1- 2-bedroom homes. Now they're booking much bigger homes to travel with families and groups. And there's been a mix shift from Asia to North America and Europe. And these are higher price per nights. That's the primary contribution for the increase of price. You are correct, though. A lot of people aren't going to be able to travel and be able to afford to travel. But another thing, Airbnb was started during the Great Recession in 2008. And people used Airbnb because it was a more affordable way to travel. After 2 years of people not being able to leave their home, many people, I think they want to get out. And this is going to be a travel rebound unlike anything we've ever seen before.
Still, even though you're projecting this travel rebound, you've got Airbnb shares down to new lows. And I'm so curious how you're watching this broader market turmoil. What's your take on this?
I'm not watching the broader market turmoil, and I would hope shareholders know that I'm obsessed over every single day are the inputs to the stock price, not the stock price. I think that's the very best thing for shareholders. So my job is to make sure we have the best service. We have enough hosts. They're prepared for the great travel season. That's what I'm going to worry about. We're going to play a long game. And I think the long-term shareholders will really benefit from that.
I wonder how this impacts retention and recruiting, though. We're actually seeing a lot of companies that really soared in the pandemic, struggling. Coinbase, Robinhood as well. Do you think this could impact hiring at all or the mood in Silicon Valley?
I mean, we're actually completely overwhelmed with hiring. We're completely overwhelmed. 2 weeks ago, we announced that Airbnb employees can live and work anywhere in the world. And if you move wherever you want in the country, we're not going to lower your pay. Since we made that announcement, more than 1 million people visited our jobs and careers page. We only have 6,000 people at the company. So I do think that there might be some broader kind of considerations, but Airbnb, we have quite a lot of interest, and I don't think that will change.
So Twitter just announced a hiring freeze and cutting costs, potentially rescinding some offers for a different reason. And I wonder, with this on top of other companies pausing hiring, if this could be a moment of opportunity for you. Do you see this as a chance to attract, be a magnet for new talent?
I mean, a lot of people are reaching out to us from other big tech companies, maybe because a lot of tech companies are asking people to go back to the office 3 days a week, or maybe because they're not hiring as many. But make no mistake, Airbnb is stepping on the gas this summer.
How are you stepping on the gas in China? We're seeing ongoing COVID lockdowns there. I know it's been a priority for you in years past. What trends are you seeing in APAC, and when do you expect them to recover?
You know, our China business has primarily been people in China leaving China, obviously crossing a border, so it's cross-border travel, going to other countries. Japan was a really popular corridor. South Korea, they're going to like Europe, they're going to other places. Because of the situation in China in COVID, there's not a huge amount of outbound business right now. And so our business in China is not super robust, and it's going to probably be a while. It's really going to track with the health crisis.
Brian Chesky, Airbnb CEO and co-founder. You can catch our full interview at Bloomberg.com. Coming up, Sonos CEO Patrick Spence joins us fresh off the company's latest earnings results. We'll also talk about why Sonos is being compared to Amazon and Apple. He's next. This is Bloomberg. The same day that Sonos released its second quarter results, the company also announced a number of new products, including a voice-activated assistant called Sonos Voice Control. This is the company's first step into the world of digital assistants, which is largely dominated by Amazon's Alexa and Apple's Siri. Joining me now, Sonos CEO Patrick Spence. So, Patrick, how is yours different?
Ours is very different in the fact that all the processing for it is done locally. And it's very private, very privacy focused, something we know a lot of our customers have been looking for. And the other thing is we've really focused it on the Sonos user experience. So think about music, all your audio needs, being able to move music from one room to another, for instance. So ours, I like to say, is, an inch wide and a mile deep, whereas, our partners at Amazon and Google, they offer you one which is a mile wide and an inch deep. And of course, we want to provide customers choice. So you can actually use Alexa simultaneously with the Sonos voice control.
So what's the long-term goal with voice control? I mean, tell us a little bit more what you mean using that mile wide, inch apart metaphor.
Yeah, so really making sure, I think we've seen kind of a first wave, right? And we usually see this with, I think, Gartner's hype cycle in terms of the excitement that comes from that initial wave of kind of the first part of a technology curve. And we saw that with Alexa and Google Assistant. And now I think what you'll see is more purpose-built assistants, which really focus on the actual user experience for a particular product or a particular brand. And so, we've done a lot of work to make sure that you can get the music faster. It's recalling what music you've been listening to. It's very specific to the Sonos use cases. And again, like I said, private and runs locally, because we heard from customers that that's important. And so what we're really trying to do is drive engagement, because we know the more customers engage, the higher their lifetime value will be, the more chance they have to come back and add another Sonos product to their system.
Now, we saw strong demand for your products in the last quarter, but obviously inflation going up, Sonos products are discretionary products. You know, how do you think inflation is going to impact sales this quarter and the rest of the year?
You know, we continue to see very strong consumer demand. Last year we had a huge year, driving 30% top line sales growth. And this year we planned for 15%. We've reaffirmed that in yesterday's news. So we'd obviously taken into account the fact that we felt we got some tailwind, obviously, from people being at home. And we feel very good about our business model and, this flywheel we have of existing customers telling their friends and family they should get Sonos. The number one reason people come into Sonos is still from family and friends telling them. And then we have existing customers come back and buy the new products. And so with a whole set of new products we announced yesterday, the great portfolio we have, and we have a backlog, Emily. So, I mean, we feel really good about where we are today, despite, I know, some of the macro challenges that are out there.
You raised concerns about supply chain issues and rising component prices. Just how difficult are those going to be to navigate over the next several months?
Yeah, it's been something that we've been dealing with really for 8 quarters at this point. And we had hoped, and I think the industry had hoped, that by the second half of 2022, most of those would have dissipated. That is not the case. And obviously, nobody anticipated China going back into a COVID-0 situation in Shanghai. And so that's really impacted things as well. And so now we're expecting, and we've been planning for the rest of 22 to really be challenged in terms of logistics and shipping and component costs. And so we've built that into our model as we think about delivering the year. But I would say, Emily, at this point, from everything I can see, expect these supply chain challenges to continue for the industry for the rest of 22.
All right, Patrick Spence, CEO of Sonos. Thank you. Coming up, watch out, Intel and AMD ARM is getting ready to go public. We're going to talk to ARM CEO Renee Haas about their IPO and expansion plans coming up next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the markets. And Robinhood is soaring in late trading after filings showed a new stakeholder. Bloomberg's Ed Ludlow here with who it is. Ed, take it away.
Yeah, it's Sam Bankman-Fried, of course, co-founder and CEO of FTX. He's got a 7.6% stake, according to a regulatory filing, based on Thursday's closing price of $8.56 a share. That would value his stake at $567 million US. And you can see the reaction in after hours, up 25%. We were up even higher just a few moments ago. We'll have to spend the next 24 hours trying to work out what this means for the future of Robinhood. Of course, 2021 such a big year for the platform. Build up a huge user base of retail traders, but then transactions started to drop off. Volatility, volumes, not what investors thought it would be. One to watch going into Friday as well. Another interesting name in the world of markets we're looking at, SoftBank, reporting a record annual loss. And this is Masayoshi-san with a lot of problems there. You see, these are the US listed shares of SoftBank. This is its Vision Fund unit that we're talking about. You're so familiar with it, but an annual loss, having just closed out the fiscal year, of $20.5 billion. $20.5 billion US. And, this is a company who knows that invests principally in private sector, right, startups, but it was its public bets that really suffered. Let's bring up the board and look at some of the biggest names. This is how they've performed over a 12-month basis. Names like Uber, Coupang, Didi, that is a lot of red. And you can see how that kind of failing in the investment approach kind of failed ultimately for Vision Fund. I think the other big takeaway very quickly, Em, is that they've really cut back the funds that the Vision Fund is deploying. You look at recent quarters, the period January-March, they only authorized $2.5 billion to put into their portfolio for new startups. That's a real departure from what we've seen in recent quarters. You think back to 2018, you remember that one, Em? $33 billion in a single quarter for the Vision Fund. Times have changed for Masayoshi-san.
How could I forget? Ed Ludlow, thank you. Well, one area where SoftBank was more bullish was ARM, its chip design unit that is preparing for an IPO. Masa-san has detailed how fast ARM is growing and how it could ultimately become the most valuable asset in SoftBank's portfolio. Joining us to talk about how ARM gets there, it's CEO Rene Haas. Rene, great to have you back with us. So we're going to get to the SoftBank stuff, but let's talk about how ARM is moving into more markets and also more valuable markets. What opportunities is that unlocking for you?
We've had a great year. We just announced our results earlier yesterday, or wherever Japan time was. Record revenue, record profits, record royalties, record licensing. We're seeing demand for ARM technology, Emily, across all the sectors, particularly, though, in the new markets such as automotive, hyperscalers/infrastructure, and IoT. We've had huge growth in all those areas. The demand for ARM technology has never been better.
Where do you see specific opportunities for growth? Is it computing? Is it automotive? You know, what are going to be the biggest parts of ARM's future in the future?
One of the areas that we've been known for historically is around power and power efficiency. And if you think about the smartphone, where ARM has historically been known for, we've had great success. That is the ultimate device that's all about power and power efficiency. Now think about the data center, or think about an electronic vehicle. Both of those have the same type of requirements. They need to be very power efficient, they need to be very mindful of performance, and they have to be able to scale. Those are two areas where we've seen huge growth in the last year. And to your point, it's an area that we think is going to be a huge growth area for ARM going forward.
Still, investors are bailing out of chip stocks. You look at the semiconductor index down further than most of the major indices so far this year. What aren't investors getting? You know, demand is high, but still concerns about supply.
You know, I can't really comment on the valuations and what's going on in the stock market. If I knew more about that, I wouldn't be in this chair. But the supply issues, I do think, are going to stay with us for a while. Everything involved with semiconductors is complex. Building new fabs is complex. Advanced technology is complex. You have more and more complex packages, which mean you have substrates, you have different packaging techniques. And then layer on top of it, you know, these automobiles, for example, that require not only a significant semiconductor content, but other areas that need to be shipped into the car. The supply chains have been stretched in a way that we've not seen before with the pandemic. And I think that's going to make the world really complex, at least for the next year or so, as far as I can see.
And when are we going to see the end of these shortages? Like, how long does this go on for?
If I had a crystal ball, again, I would probably be in a different industry, but I think it's going to be with us for a while, Emily, because again, when you think about the investments required for semiconductors to build a 5 nanometer or a 3 nanometer fab, there's a huge lead time associated with that. The chips take longer and longer to build. They're longer and longer to manufacture, which means predictability gets harder. And then increasingly in some of these products, you have more and more content. And it's not just one chip that's not available. If you have an entire product that's all manufactured and you don't have a diode, let's say a power diode that can go into the car can't ship. So again, I think going forward, we've got to get our arms around what this new world is teaching us relative to supply. And I think it's going to take a little while.
There's a report that SoftBank plans to keep a majority stake in ARM after you spin it off. How big a stake are we talking about here? What conversations have you had about this?
I can't say too much about it specifically. Masa-san has said that ARM is preparing for an IPO, and they have said publicly that they intend to have a controlling interest going forward. I think what that says is Masa thinks that the long-term prospects for holding ARM is really good. So I think that says a lot about his confidence in our future going forward.
How soon could an IPO happen?
Yeah, I can't really say. Hard for me to kind of go forward on that area, but as we've said before, we're preparing to make that happen.
Okay, but how are you evaluating this market turmoil, and could that delay or influence your plans?
Obviously, market timing is going to dictate a lot of things. You know, who can say what the market's going to look like? We're just doing the kind of things that we need to prepare for an IPO.
Now, Let's talk about another part of the ARM business, and that is ARM China. You know, you and I have talked about some of the turmoil you've seen in that particular part of the business. Are you fully in control of the joint venture right now? How is it doing financially, and what can you tell us about its future?
We are. Gosh, it just seems like 90 days ago you and I were talking about that. I'm happy to say that chapter is now behind us. We have resolved the issue. We have a new management structure in place. We worked with the board of directors, local stakeholders, Chinese government. The new management is in place and we're operating normally. We've been able to complete customer contracts, sign licenses. So we do have operational control back under a new leadership team, and we are now moving forward.
All right, Renee Haas, CEO of ARM, thank you for joining us. Coming up, crypto goes down and down some more. How the Terra meltdown is giving fodder to crypto skeptics, and how low can markets go? That is next. This is Bloomberg.
I wouldn't characterize it at this scale as a real threat to financial stability, but they're growing very rapidly, and they present the same kind of risks that we have known for centuries in connection with bank runs.
Dominoes are falling in crypto. First, it was the collapse of algorithmic stablecoin Terra USD. Now its grown-up cousin, Tether, wavering from the peg and fueling concern over its status as a place to hide in times of turbulence. Let's talk about what it all means with Bloomberg's own Olga Kharif, who covers the cryptocurrency market for us. So, Olga, I guess it's fair to say we're in a crypto winter. How is this winter different from the ones that have come before?
Absolutely. I think it's pretty clear we are in a crypto winter. We had one in 2018, but of course, today what we have that's different is that we have a lot more institutional investors, and that's why crypto is behaving more like a risk asset that's kind of moving in line with the rest of the market.
So remind us how the last crypto winter played out and how you expect this one to play out, given that there are more people with skin in the game.
Absolutely, definitely more people. So what happened was in 2018, thousands of coins basically died, and lots of projects went under, and lots of new projects got hatched. And I expect we'll see the same thing happen now. You know, if this crypto winter is prolonged, a lot of these projects and coins will die, and we'll see sort of a clearing of the plate, and we'll see what the strong players are, who are the survivors.
Now, let's talk a little bit about Coinbase. Their valuation dropped precipitously, and just over the last few days. I'm curious what you think this means, because Coinbase has been, you know, in some ways a measure of what's happening in the broader crypto space.
Absolutely. So they're obviously the biggest exchange in the crypto exchange in the U.S., and their value dropped by more than 50% in the last week. And basically, it's a very sort of strange situation, because just several months ago, much smaller competitors, blockchain.com and Gemini, raised money at very high valuations. But obviously now all VCs that are looking to fund crypto companies are looking at Coinbase's valuations and are saying, you know, maybe the companies in our portfolios and the companies coming to us are overvalued. And so this could have a ripple effect on venture capital activity in crypto.
All right, lots to continue to watch and digest. Thank you for giving us the temperature of this particular brand of winter, Olga Kharif. Appreciate it. I want to continue the conversation with Nicola Giulia for more on this. He's the CEO of SoRare, an NFT-based free-to-play fantasy sports game that just announced a partnership with Major League Baseball and the MLB Players Association to launch the official NFT-based fantasy sports game for all MLB teams. We're going to get to baseball, and I'm a huge baseball fan, Nicola, but I want to ask you first about the markets and, you know, the fact that we're in the middle of a very cold spell. What's your take?
Yeah, hi Emily. Thanks for having me. I think first of all, like for us, like we are using NFT technology to the benefits of the fans. We don't have any cryptocurrency or token that we developed, and so we are growing independently of the cryptocurrency market, which is again to the benefits of the fan.
But does this impact, at least sentiment about the future of Web3, the future of NFTs, and sort of the growth of this new frontier?
I think in general, obviously, as any radical innovation, you have cycles, right? And so Sorare has been founded in 2018 during one of the biggest crypto winters, and I think building during the cycles helps because you have less distractions, you have more focus, and less opportunistic, like people building in the space. So like we love building in winters too. And yes, the sentiment may be less good right now, but I think the leaders of tomorrow will be built right now.
Now, there has been some controversy about what's actually happening in the NFT market. The number of traders is still growing, but NFT prices are declining. I'm curious what you're seeing in terms of your own sales and the business that you're driving.
Yeah, I think what sets Sorare apart is the usage value of NFTs. So we've seen a lot of projects growing around the pure collectible value of those NFTs. But for us, it's all about what you can do with the NFT. So we have this fantasy game where you can play with officially licensed NFTs, and so we have been growing consistently the last 3 years and the last couple of weeks as well in terms of sales. We closed last year at 325 million in sales, and we keep on growing. We expect to do 700 million this year. And I think that makes all the difference, right? Like what you can do and how you can engage and retain the fans because of the experience you have.
Now, you just announced this partnership with MLB and the players who, as we know, don't always necessarily agree. How did you convince them to get on board, and why baseball?
I think they ask us three big questions. The first one is like, are you the best partner to help us grow this huge category, NFT fantasy? We have proven with soccer that we created this category, and we are the best placed to develop it with top US sports. So that was question number one. The question number two was like, are you the best partner to help us grow the audience? And we are selling in 180 countries across the globe. We have a global audience, and we're gonna help the MLBPA and the MLB to grow the reach again overseas. And then the third question was like, are you the best partner to provide the best experience to the fans? And so we are building an amazing team in the US with people coming from ESPN and DraftKings and all these companies that build amazing products. And so we are very confident we will do too.
You also recently welcomed Serena Williams as a board advisor. What does she bring to the table? Of course, we know she might be the greatest athlete of all time, but she's also going full speed ahead in venture capital and building out her own portfolio.
Yeah, for us, like the players are at the center of what we do. So we are lucky to have dozens of players that invested in the company from different sports. And with regards to Serena, we're gonna go big on women's sports. So obviously, she's a keen advisor around our developments there. She's helping us also like to connect with the athletes, the unions, and help us to develop a big revenue stream for them. And we are also very big in diversity, the fans that we want to hire and the people we want to hire, and she's also advising us on this matter.
All right. Excited to watch. Nicola Giulia, CEO of Sorare. Thank you for joining us. Coming up, lockdowns in China. What implications could they have, not only for the Chinese economy, but for the global economic recovery? We'll talk about that in a live report from Shanghai next. This is Bloomberg. take a look now at China, still battling a wave of COVID infections with strict lockdowns that are threatening the economy. In fact, one of China's top statistics officials says the outbreak has caused, quote, a huge shock to the economy, a rare recognition of the cost of the government's COVID-0 strategy. I want to bring in Bloomberg's Alan Wan now for more on this, who is joining us live from Shanghai. Alan, thank you so much for joining us. We've seen your reporting earlier in the middle of this lockdown. We saw your refrigerator getting low. You talked about your inability to go out and get more food. Talk to us about how you're doing right now and what exactly you can and can't do in the midst of this lockdown at this date.
Well, I was telling everyone, I'm on day 43 of my 4-day lockdown, and joking aside, yeah, it's been incredibly tough, very frustrating. There's millions of people like me in the situation. Right now, I can actually walk downstairs, walk within my compound, and get pick up like food that's delivered to me. Obviously, not many shops are open, so you know, I'm sort of stuck to whatever's available. Although the other day I did get some Kentucky Fried Chicken. So the food situation has eased a little bit, but there's still a lot of concern about these quarantine facilities. People are still being, can I say, you know, coerced into going into these facilities if you test positive, and they've actually tightened some of these restrictions. Before, you know, if you live in a building where there's some positive cases, as long as there aren't any close contacts, you don't live on the same floor or something, then you wouldn't have to go. But now, even if you test negative and there's someone in the building that tests positive, the likelihood is that, you know, you could be sent into these quarantine facilities, and we see some of these images that look pretty grim.
We've seen the frustration in social media posts, people who you know, can't get food. How would you describe the mood? How are people in Shanghai taking this?
Well, I think there's a lot of people like me. I hate to make this analogy, but I'm going to. There's this book by Elizabeth Kubler-Ross of Death and Dying, where when you hear some really bad news about you know, maybe your health or something, and you go into shock and anger, and you move through several stages of despair until you reach the final stage, which is acceptance. And I think a lot of us are at that stage of acceptance, and right now we're just waiting around, hoping that, you know, this lockdown will end sooner or later. Right now, the most important metric of all is one called community spread. Basically, it's the number of cases outside of these quarantine facilities. And there are three consecutive days of no community spread. Theoretically, we should be able to be released from lockdown. And late last month, it happened for 2 days, and then the third day, there were a couple of cases that popped up, and we were back to square one. So that's what we're looking at right now. I mean, the number of cases in Shanghai has been falling, but community spread has still been persistent. So we're hoping that at some point, you know, we're going to be released. Like I said, it's very frustrating, and you know, we just got to wait and see.
So there's obviously a question about how this impacts not just the local economy, but the global economy. Now we're also hearing rumors about a lockdown in Beijing. The Chinese government, as I understand it, has denied those rumors, but we are seeing a lockdown light situation. What can you tell us?
Well, 2 points. First, impact on the economy, and two, Beijing. Well, you know, yeah, exactly. Even though the number of cases in Beijing, there haven't been that many, you know, roughly in the teens. But the problem is that it's still there, and the government said that you know, there's not going to be a lockdown in Beijing. That's what we were told as well, you know. But it seems that you know, they're moving in the opposite direction. They've been shutting down the subways. They've been doing a lot more mass testing. So I've been telling some of my Beijing friends that stock up, especially Coke. You know, buy lots of Coke because that's a valuable commodity during this lockdown. And you're right. There's been a big impact on the global economy. Especially on, you know, recently we've seen all the data coming out of China. It's pretty ugly. Manufacturers contracting. We know, of course, consumption is weak, and inflation is surging, just like in the rest of the world. So, and what does that mean for China? I mean, basically that it's not going to meet its ambitious growth targets for this year. Well, I don't think so anyway.
Alan Wang for us from Shanghai. Thank you so much for joining us, Alan. I know it's early in the morning there for you. Really appreciate you giving us the view from China. That does it for this edition of the show. We're going to be back tomorrow. I'll be joined by Greylock Partners and LinkedIn co-founder Reid Hoffman. Always fun to talk to him. And of course, check out our new podcast anywhere you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.